Hello and welcome back to our YouTube channel. Today we have for you a stock that has made multiple returns to all its investors from its listing in 2017. We're talking about the retail giant D-Mart. D-Mart, as we all know, is a company that was started in 2002 by none other than the very famous investor Radhakrishnan Damani. He saw the Walmart model in the US and wanted to replicate it, in a very Indian way to the Indian audiences. So thus he started in 2002 this brand called D-Mart under the name of Avenue Supermarts. It it started growing from one store to multiple stores in multiple locations in just two states, uh, in Gujarat and Maharashtra, namely, for a very long time. So after 2012, they started to make stores in other states as well. Even today, the majority of the revenue for DMart comes from these two states, namely Gujarat and Maharashtra. That is about 40% of their revenue. The other part comes from, namely, the states Karnataka, Tamil Nadu, Andhra Pradesh, and Kerala. So these form 70% of DMart's revenue, and the rest 30% are just getting started in other states. Today we will tell you how the stock is performing currently and why the stock has not performed in the last 5 years. So let's get started then. The current price of DMart is in and around 3500 to 3600 levels, and it has been going around that price for about a week now. It has fallen from the levels of 4,500 to 5,000 levels to these levels due to the margin contraction reports, in the last results. So now the market cap of the company is around 2,30,000 odd crores, and the stock has made a high of 5,400 on a 52-week high basis. Currently the stock P is 86. DMart usually, my friends, trades at around 100 PE because the growth of the stock is around 25% annualized, and it's a guaranteed growth stock which has been growing at a very tremendous period for a very long time. For stock like this, there is a very good PE that a market gives to these kind of companies. Also, the ROCE is at around 19.4% and return on equity is around 14.5%. If you see the PEG ratio too, it is quite high compared to other stocks, but we give these kind of valuations to top quality like DMart. If you look at the stock price chart, you can see that over from its listing in 2017, around 600 rupees, which is on the day it got listed itself, it became a double to around 600. It was floated around 300 to 400 levels. Since then, it has given tremendous returns to all its investors until 2020. After 2020 till 2025, if you can see the five-year chart here, the stock has not performed at all. If you look at the 2021 levels, where it reached around 5,300, it is much below even those levels, currently at around 3,500 to 600 levels, as you can see. So the company is debt free and it's constantly growing at the rate of 23% over the last 5 years. So the company has been growing, but the stock has not been growing. Okay. So the growth rate in the sales is also around 28%. So you can see that the stock is a very good growth stock and has been a consistent compounder as well. So it's not been paying dividend and it's 11.7 times book value. These are the cons, my friend. So that's okay. So if you look at its peers also, you can actually directly compare it to Trend, which is also in the retail space where it is also growing at tremendous speed. Trend is nothing but Zudio. So it is also growing at a very high speed as of now, and it can be comparable to Avenue Supermart. So you can see that the stock has been trading around 100p, and currently, it has come down due to the stress in the margins, and currently trading at 86p. you can see that from 2013 to 2024, the last 10 years, you can see that the sales have uh, quadrupled. Okay, and also the net profit has also been growing at a tremendous speed from 94 crores to in around 2700 crores. The margin contraction that everybody is talking about is actually just a percent, or a percent and a half. It has been constantly maintaining 7 to 10% margin range. If you can see from 2017 levels where it got listed, it was at around 8%. Even now the operating profit margin is around 8%. So the margin is not growing, but it's not contracting either, like the reports mentioned in the media. So you can see that the growth is doing well from the time of 2020 to 2025. So it has grown from 20,000 sales to around 57,000. That's almost three times sales, and almost two and a half times net profit. Okay, as you can see. So you can see that the it is growing at a very good pace, and also the stock has not been moving from 2021. So you can see that the net profit has grown, but the stock has not grown, which makes it available for a very good run in the coming days. So if you look at the stock price CAGR in the last 3 years, it's -7%, but the profit has been compounding at 32%. Now, let's look at the shareholding pattern of the company. You can see that 75% is held by the promoters since listing. The promoters have not sold a single share since IPO, and also have not been taking any dividends, and have been investing the entire profits for the growth and expansion of the company. This shows how committed they are, and this shows their conviction as well towards this company. So this is something that we need to take note of. Okay, the FIIs hold 10% and the DIs hold around 7%. The CEO who is currently operating the company holds around 2%, and the retail investors hold about 6%. So as you can see, guys, the promoter is very convinced about the company that he's running, and is not selling a single share in the company. Now, let's look at the store holding of this company. So, if you see, DMart currently operates around 377 stores across India, and has been guiding and aiming to add around 40 to 50 stores per year. The long term guidance is, however, to add around 70 to 80 stores in a year. So, it's simple logic, guys. So, if the company is adding 40, 50 stores a year, and it's guiding for 70, 80 stores a year, simply the top line and the bottom line will increase, because it's a mom and pop business, a traditional retail business which has been tried and tested for a very long time. So you can see that it has been trying to do the same for a coming years. It has strong presence in Maharashtra and Gujarat, like I mentioned, and it's also operating in and around Telangana, Karnataka, Tamil Nadu, MP, Rajasthan, Punjab, and the NCR region. Now, if you see that on the global scale, Walmart operates about 10,500 stores across the world, while it operates around just 4,600 stores in the US, which has a population around 330 million. So imagine DMart now, which is directly comparable to Walmart in terms of being an Indian company. Now you see the number of stores currently that DMart holds and number of stores that Walmart holds. So you can see, for the population that we have, which is around 5 6 times the US population, you can see how much we can grow, and how much the consumption can grow, and accordingly how much demand can grow. If you see the number of stores, 10,500 for Walmart, and just in the US it has around 4,600. And even if you say we would be 4,600, we would have 4,600 stores of DMart, that would be enormous compared to the revenue and the profitability structure as of today. So we just have around 300, 400 stores. We are talking about 4,600 Walmart stores. Think about it, guys. So that's around 10 to 15 times today's sale and today's profitability. Think about it. So that is why this stock, we think that it will keep compounding perennially until something really big happens or something really bad happens to the company, which we don't expect to happen. Now that you have seen all the good parts about DMart, we want to tell you how things have been changing and how the landscape has been changing. As you see that we are in a fast moving world where things are moving much faster than it used to before. So there is an advent of quick commerce which has been eating up the margins of DMart. It is also affecting the top line of this company, and because of which the company is also trying to pave its way into the quick commerce business. Because if you are left behind, then there is no way you can catch up. I feel DMart is better positioned than other players to be part of this quick commerce boom. If it can carefully manage the old retail and the new retail, the old commerce and the new quick commerce, it can do much better than the peers which are either listed on this side or the traditional retail side. So let's start with the CEO change. A CEO that has been there for 20 years uh, for DMart is being replaced right now. The outgoing CEO's name is Ignatius Naval Narona. He was the CEO for the last 20 years, and now the new CEO is called Anshul Asawa. So he's been taken in as part of DMart's e-commerce playbook to steer growth from the company from the old commerce to the new era. So, because of the rapid rise in demand and for instant fulfillment, which has been served by many players such as Zepto, Swiggy, and also Zomato's Blinkit, it is eating into the margins. So now this companies try to redo the entire strategy by getting into the new quick commerce strategy that has been doing well for players like you know Zepto and Blinkit and Swiggy Instamart. So let me tell you about something that this Avenue Supermart did. So when the quick commerce boom started, these people also got into it. However, their mode of making this business was a little different. So how they went about it is, so they launched something called DMart Ready stores, parallel to DMart stores, the traditional DMart stores. So there you would use the app to order, and then the things would be packed and kept ready in the DMart Ready stores. So you would have to go there and pick it up, nice and ready. So that was the option that DMart took to challenge the quick commerce segment. But as you all know, quick commerce means delivery within 10 minutes, half an hour, 1 hour, or something like that. Nobody wants to pick up goods from a position. They want to order things online and get delivered online. So then again, Avenue Supermart changed its model to a quick commerce model, where in which today you could order and maybe by tomorrow or day after they would deliver up to you. Even this model, it is still working. It's not like it's doing bad or something. It's still growing at 20 to 30%. But the problem being that people want delivery at home within half an hour, 1 hour. Now, whether Avenue Supermart likes it or not, they need to change as per the change that the people have been now. So now they are shutting down these pickup ready stores. Now they're actually trying to divert themselves to quick commerce, wherein which within a day they would try to deliver. As of now, they are delivering around 50% of their orders within 24 hours, and the rest 50 within a day. Okay, so now they're planning to get a new CEO who would help them, take their business into a new turn, the quick commerce turn, where it's available on quick commerce as well and on traditional retail as well. This will make sure the company comprehends the change and also grows along from both the verticals. There's still people who want to go and have the retail experiences. There are still people who want to sit at home and order. So the DMart wants to be available for both. I think this is a very good strategy that DMart has been playing, and getting a new CEO who wants to, change the company in the this way that it's planning on doing is also very good thing, because after 20 years I don't think the older CEO would be having something new to give away. The old CEO is also staying as a director in the company, and the new CEO is getting guided by him while he also innovates and tries to steer the company as well. The new CEO, by the way, Mr. Anshul Asawa, has very good pedigree from Hindustan Unilever. He was managing operations in Southeast Asia, and he has also managed few states like UP, where he has managed to get the growth and demand for the Hindustan Unilever products. I think this is the perfect example of recruiting somebody who is apt for the company. Now that you know about all the things that DMart plans on doing and what it plans on expanding, and from the e-commerce space and in the traditional retail space, you have a very good idea about how this company might do going forward. So we feel this company is a very good mix of both the traditional play and the e-commerce and the quick commerce play. The company being a historic leader in its segment, it's very hard for somebody like that to lag behind in a change scenario. So the company will do anything in its power to make sure it's on the right track, and it makes sure that it's on the level playing field. Because of the assets and the robust infrastructure that DMart has, it will be able to easily get into these kind of areas, in no time. Let's hope that this company make sure it makes inroads into the quick commerce path as well, while growing around 40-50 stores as predicted by the market in the traditional storefront. We look at this stock as a very good buying opportunity right now, because it has been consolidating from 2020 to 2021 levels. So from the current levels, we feel that this stock will go to about 5,000 levels in and around 2 years. That is our target for the 2 years, around 5,000 levels for the next 2 years, and around 7 to 8,000 levels for 2 to 4 years, term. So we feel you can have some buying in these stocks as well and see how it goes, because the fundamentals of this company are very strong, and we feel the growth trajectory will remain the same or maybe even do better in the coming years. Please make sure you speak to your financial advisor before making any investments. Remember that the stock advisory that we are providing, we are not SEBI registered. We are just, you know, doing this for educational purposes. So make sure you take a very important decision for yourself to invest your money in the right place by doing your own research. The research that we are doing is only for educational purposes. Also, we are making sure that the price levels that we are talking about in every stock is being mentioned at the end of the video, so that you can have a track of all the stocks that we are suggesting and see how it is doing. This is about us being transparent about how we want to go about in this channel, and we would also want viewers to see that this is the stocks that the channel is suggesting, and this is how it is doing. But please make sure you speak to your investment manager before investing in these stocks. Thank you.